Hello everyone, welcome to On The Blog. In today's episode, we are going to have a live discussion with Agnieszka Niedzielska.
Hello.
Agnieszka is my colleague and we've been working together for a couple of years. Aga is a senior solutions consultant at Espeo, and in our company, we have companies to build fintech and blockchain solutions. In today's episode, we are going to talk about crypto asset reporting framework, why it's important, who introduced it, and how it affects different businesses. So, Agnieszka, you are a solutions specialist and not a lawyer, not a compliance officer. Why today you are going to discuss about CARF?
Well, there are quite a few reasons for that. First of all, at Espeo Software, we help fintechs and fintech companies. And always, if you are working with financial institutions, there is a compliance topic nearby. Either the solution that you build is the tool that will actually fit the data into the reporting system, or the other way around, the solution that you are building is the one that will actually get the data from this system. That's one of the reasons. We also have some experience in building actually tools for reporting, but for the client as a tailored solution. Other aspect of that is that it's a CARF reporting, so it's crypto assets reporting, and that's close to home because we are also servicing clients with blockchain consulting, etc. Last but not least, nowadays reporting, it's not only about legal and formal aspects. Equally, with the legal aspects, we've got technical aspects. In this case, XML. And that being said, technology is what we do best, yeah? So we also need to know about that. And last but not least, us being the consulting team, we need to, our goal is to look for optimal solutions. And in this case, we've got entire market, a lot of entities that will need to report. It would be really inefficient if we tried to build the same solution for everyone from the scratch as a custom software. That will be a lot of our clients' money, but also our time. So we decided to build something that will be the tool that's ready to use because, everyone needs to build the same XML report that will be validated with the same XSD schema published by OECD. So, all on that, that's why I'm here.
So if you want to find out more about one of Espeo projects in the field of crypto reporting, you may visit the website espeo.eu/cointracking. Okay, so let's make one step back. So why was CARF introduced and who did it?
Well, it's introduced by the OECD, like we mentioned already, and it's Organization for Economic Cooperation and Development. And with that, we can say that CARF is, it's all about the money. But the idea is to gather information about transactions that haven't been reported so far. With the crypto and blockchain that are rather borderless, what we need to do, we, meaning in this case, regulators, we need to look at them differently. And that's what the CARF is trying to do. The idea is to be able to recognize and tax the investments that so far has been somehow slipping off the tax authorities' field and area. Because in TradFi, we've got some intermediaries. And for example, the area of jurisdiction is much more simple than now. So, and that's not the first idea that we will be gathering information on the investment of different countries' citizens that are made outside of this country, because in this case it's about crypto assets, but we already have FATCA and CRS reporting that's connected more to TradFi items like fiat or bonds or stocks. Okay,
some people in Europe, they call CARF decade. Is that correct?
Mostly so. That's how I would say, because it's not exactly the same, but for the sake of discussion, it usually is. Let's go deeper. What's Decade? Decade is the 8th amendment of the UE directive that's connected to the cooperation and data exchange. And this amendment clearly states about reporting crypto assets, digital assets. So in this case, that's very similar to the CARF, but there are some differences because, for example, when we are talking about CARF and CARF terminology, that's not what we can find in DEC 8. There we will find terminology that's alongside MiCA that we have in EU. So all in all, these are very close, but not exactly the same. And DEC 8 goes even, let's say, broader because, for example, there are some additional penalties. Let's say that you are a user that's supposed to provide some additional data for the CASP, so crypto asset service provider. That's, for example, you have your account there, and you fail to do it. So there are ways in DEC 8 to actually block your transaction. So there are, I would say that for the sake of discussion, the topics are very near because we are talking about reporting in information that are connected to the tax and tax obligations. But indeed, when we look into details, there are some differences.
So regular people, citizens of EU, they will have any new obligations regarding the tax payments or reporting of their payments?
No, that obligation is put on the reporting entities. So actually, fintechs, banks are clearly stating CARPs or are CASPs because these are reporting crypto assets services providers or crypto asset services providers. For sure, they are required to annually send an XML report with the data, with the transaction data, to their domestic authorities. And then those authorities will exchange this information with other systems, and it will be international exchange, so that actually everyone who has multiple tax residencies or one tax residency, but also some investments outside of their main country will be, let's say, reported, and their tax reports will be easier to verify. So there are quite a few things, but all of the obligation to send new report are put on the reporting entity. Okay,
so does it impose any new obligations on crypto traders or just the companies that are used by those people?
As a consequence of this obligation being put on the exchanges, even ATMs in some cases, of course, crypto and ATMs, the result is that something might change for the traders because for now, some of the users, for example, provided ID wallet, a wallet of the ID, and up to that the email, and that was enough to start working, exchanging money, wrapping crypto, etc. And now we need to, the crypto assets service provider will need to report for this transaction, for example, address or tax identity number of this person. So this person will be asked to fill in this data. So generally, there is no obligation for the end users to provide, like we as a users do not need to report anything, let's say yearly, but the organization that will need to do it can ask us for some additional information. So the trader may expect some changes in the system and some requests to fill in the data.
But if you are a crypto trader and you already were verified, you were kind of KYC'd by your provider, you don't have to do anything with that regulations.
Exactly. If the services you are using aren't asking you for anything new, you can just you are just okay, and you don't need to worry about anything unless you are a compliance manager or officer. Then, that changes everything.
Okay, Agnieszka. So, is CARF a new regulation, or what's the difference between CARF and CRS and FATCA?
Well, there are differences. First of all, CARF is something new. The first reporting period starts 1st January of 2026. The reporting will take place in 2027, but it's very important to remember that, you won't report in 2027 information that you didn't actually get and store in 2026. So that's why this 1st January of 2026 is crucial. But getting back to your question, we already have FATCA and CRS reporting. These are also reports that are connected to tax identity and tax residency or residences, but they are more connected to the traditional finance. So they are XML reports. They have their own schemas. CRS is connected to the OECD. And what can be said that a little bit of CRS and CARF overlaps, but let's make it a bit simple. When we are talking about CRS, we are talking about actually reporting account by account and this balance of this account. When we are talking about CARF, on the other hand, what we are reporting transaction by transaction. Exactly, about the digital assets. Also the scope of the data, just like you said, with the CARF, we've got digital assets, we've got transactions of wrapping, staking, crypto loans, while with CRS, what we have is traditional, let's call them traditional financial investments, so rather stocks, bonds, or even fiat money. There is a part, because with CRS 2.0, we have some additional information all on digital and electronic assets. And with those, there could be a part that will intertwine. So there could be situations when you would need, or organization would need to report the same part of data as a CRS and as a CARF. But again, that's addressed. Then you only report it in CARF. But that's very important to remember. Neither CRS nor FATCA will be removed or withheld. We still have those obligations, and that's another one on top of that.
So every single deployment of the tool will be conducted in line with the internal regulations of the institution. It means it will be done according to the security measures they take, privacy policies, and so on, right?
Yeah, exactly. And no need to add another company to the list of data processor or to actually make some audits in external companies. Everything stays where it should be, so where the organization puts its clients' data.
So let's talk now about the technical side of the reporting, because all in all, it's just about XMLs, isn't it?
Yeah, it is, but still the devil is in the detail, because it's an XML reporting, meaning that we've got the schema published. That means that there is an XSD schema, and when the XML report is produced by the filing entity, they need to validate it against this schema. And that's the
biggest kind of challenge, I would
say. I totally agree. We can have a lot of data. That's one thing. Another thing that's connected to that is, for example, to start, but for example, this validation process. Yes, that's a clue, because that makes a report valid. That shows that the data is accurate. And for example, it's not as easy that in the schema we have some field that is required or not required. Some of them are dependable, meaning that if you provide some information in this part, then you need to provide some other in some other part. So yeah, that's not so simple.
So is it the case that each country can have slightly different requirements regarding the reports that they want to obtain?
Yeah, that's true. There's one XSD schema, but that's not everything, because each and every domestic tax authority will adapt it. Each country adapts it a little bit to their own needs, to their own systems. For example, maximum size of the file data can differ. Also, the way the report needs to be signed, or the way it needs to be reported, up to the way how and where this reporting entity should put it to send it to the local authority. So yeah, I agree. There will be some differences.
But I would say that for banks or fintechs, XML reporting is nothing new.
Yeah, I totally agree. Just like we said, it's a standard. However, with this standard, we are talking about new reports, so new challenges. One of this is multi-jurisdiction. For example, this has two aspects. One is that we need to be able to identify customers or clients, because also some businesses will be reported, to tell if they are, what are their nexuses, what are the places of business. And the other is that if the reporting organization have different branches, then they need to be aware of those differences that you just mentioned. And also the timeline is different, because most countries, I believe there is 52 of them, start with the reporting, with the CARF reporting from the 1st of January, but there are also January 2026. But there are some that will start with 2027. Exactly. There is also a part of data aggregation, data preparation. No matter how many times you did it, that's something that you need to work in, and XML validation. That's the goal. With enough skills, you can make and from the Excel file, just XML file. But it's a file, and from the file to the proper and accurate report, I would say that it can be a really long way.
In your opinion, what are the three key challenges that are ahead of financial institutions regarding the CARF reporting?
First of all, I would say that there is a need for, preparing the data, processing the data. So being aware of what kind of data we are, if any of this if any of this information needs to be provided, needs to be filled in. For example, if there are any information like, I don't know, let's say date of birth or place of birth lacking, then we need to address that. But also which systems have the required data. If the systems have data, then are those data compatible? We can have some discrepancies between the data, and we need to address this at this stage.
So you mean the internal systems of the banks or fintechs, right?
Yeah, exactly. And actually for crypto assets, there are often multiple systems that handle the entire process. Then also data aggregation, data standardization, but also making sure of the data quality will be a huge challenge. And just like I mentioned, XML validation, it's a huge topic because it needs to be done, and it needs to be done well, meaning that the validation report is something very important, because one thing is being able to tell that, my data isn't accurate. The other thing will be actually being able to tell what's wrong with this data. Just like we said, there is, some of the reports can be quite big.
Is there anything specific just because the crypto transactions are going to be reported?
For example, we mentioned that, CARF is similar to CRS, but what about companies that have never ever prepared CRS report? If we are talking about crypto service providers, then they never reported anything connected to CRS and to tax reporting. So they do not only need to think about data process and aggregation, but they need to prepare entire organization for that. Like we mentioned, for example, now we know exactly what kind of information are needed for business as well as for the customer as a user. Some of them would need to adjust their KYB or KYC procedures. So all in all, with this new standard requirement, we need quite a few individual special aspects to actually oversee.
Okay, so CARF reporting is not just XML preparation, sending to some institution that validates that, but it's a much complicated process. And the companies that run crypto business and run crypto operations provide digital assets for their clients. They also have to take into account many different aspects. So can you elaborate on how in Espeo we are going to address those issues, those problems, those challenges?
Yeah, we are happy to help with most of them. For example, starting with the last that I mentioned, data validation, because the tool that we've built, it's ready-to-use tool, a simple plugin that can be added into institutions' infrastructure, no matter if it's on-premise or cloud infrastructure. all of that, wherever we can add this plugin. And what this plugin does is actually takes data, provides XML file, and validates it. Validates it against all of the against XSD schema, talking about structure of the file, dependencies that are there defined, and also format itself, like from the technical perspective. So that's something that our CARF tool in the core version can do. Let's also mention that it's we also provide services for that to make sure that the schema will be updated and that the company will have someone who will take care in case of some questions regarding how it works, because it's really quite simple tool, but still you need to implement it. And of course, we take care of that.
In Espeo, we built a tool that helps prepare reports. But how we are going to make sure that the entire process is successful for the institution, and they will be ready 1st of January with the reporting?
Yeah, that's a good question. Our goal is to be a one-stop shop for the need. And in this case, here we have a partner, fintech. That's the company that can take care of entire compliance assurance. So we do what we do best. We are best in the technology and this area, and we have partner that's best in compliance assurance. So we do it together.
Where our viewers can find more information about that tool?
Of course, at our website at espeo.eu/CARF. So it's very simple to understand for sure. It will be available in the comments, and then you can find all the details about different versions, because there are some more versions than just this basic one.
Okay, so let's imagine that we have two institutions in the same country, and they both need to prepare the same kind of final report that is being sent to the regulator. Are there any challenges related to the way how the data is being stored or is being managed in both of those institutions?
Of course, I mentioned that it's a standard tool, but we can't say that there is one standard data form in all of the institutions.
True.
So if there are two institutions, they will have probably different data sources. Even if they come from the same vendor, still there will be really customized. So that's when our Elevate module comes in. That's a plugin to our tool. So yet another element that takes care of data aggregation, of data processing, transforming, whatever is needed, so that information from the raw data will be transformed into something that can be data feed for this core process. But it's another thing that is a plugin to the main tool, because some of these organizations, especially bigger one, may have their own data warehouses, data teams that will prefer to actually handle this part of data preparation. It's also worth mentioning that this tool we built together with the fintech company, and they offer service that help with actually data overseeing, making sure that data are compliant from this very formal point of view.
Okay, so let's imagine that a company wants to invest in such a tool. So what they will gain in return for their investment?
First of all, less of a headache. Yeah, that's the big thing. Definitely a solution that's installed inside the organization. That's really important, because if we are adding something to the internal infrastructure with this tool, there is no data going out or in. Everything is processed inside the organization. So that's really important, because it's easier to implement from the perspective of internal policies of data processing, because we are talking about data about the clients and their transactions. We are talking about buys, pays. I believe there are also payments and transfers to be reported. So all of those are really sensitive information. And here they stay exactly in the organization, in the bank or fintech, we've got automated process. If it's automated, that it is repetitive, and if it's repetitive, it can be audited. And the holy grail of this also the validation. Yeah, I mentioned validation a lot, but that's really how we know if the report is proper, is the data is accurate, and what needs to be changed in the data feed to actually meet all of the requirements.
So what's your view on the pace of innovations with regards to the new regulations like CARF?
Well, no one likes reporting, and we can say, and at the first glance, you may say that, well, it stops innovation, but it's actually not true. Our report on the state of the DLT presents information that most of the responders are eager to have regulations because they give them clarity. So with those, CARF is yet another step in clarity, in transparent verification, in transparent taxation. So I think that that it won't stop innovation. It will help it grow.
And it also is going to facilitate the adoption of the
it's
digital
possible.
assets, right?
It's possible because now everyone will feel a bit safer.
Thank you, Agnieszka, for all the information that you shared.
As
you may now know, compliance is not only about XML files, but it's also about the processes, security, policies, safe deployment. So all these aspects need to be taken into account when you try to be compliant with the new regulations. Today we are going to leave you with that information, with that knowledge. If you have any questions, please post the questions in the chat under the video, and we'll get back to you with the answers.
Thank you very much.
Thank you for watching.